So you have to ask yourself, is this worth it? So it's going to cost me close to $320,000 and it's going to get me about 30 grand a year. Now, that might be a great recovery. Your ROI on that one is going to be about 10%. I'm in Crozier with Crozier Realty. We're hopping right in here. I'm going to jump right in. So Mississauga has released their pre-approved garden suites. So with the pre-approved garden suites, they've only released right now the 1-bedroom and the studio garden suites. So what we're basically going to jump into here, we're just going to see what the designs are. They break down everything on the website now. So they go over the cost, the size, the look of it. So I'm going to jump into the 1-bedrooms here. So they're basically saying the 1-bedrooms, there's a couple different things. They literally break down everything from the flooring, the plan, the walls, how much it's going to cost. So they kind of break everything down for you. Now, they do have a section here where we're jumping in here and you can actually check out the plans, the costs. So they have a full material list that you can jump in and go over here. I think it's a little pricey based on what they're saying. Can you do it for less? Maybe, but on average, to build a garden suite in general, even if it's in Toronto, because that's predominantly where we've seen them happen, you're pretty much looking at about $250 to $300K to do these. Now, the prices here, which we'll go over in a little bit here, but let's just jump in. So these are showing you here, this is the pricing list for a 1-bedroom model. So as you can see, they look really nice. Again, you're putting this in your backyard. It's a laneway. There's access that goes through. There's permitting and zoning that has to go through with all of these kind of things. We'll pop one up here. It's actually a pretty nice looking house. One thing to keep in mind though that nobody talks about with these properties is a lot of the times you actually lose your parking. So if you have a mutual drive where you can drive straight through to the back and you can set up a laneway there, that's usually your parking spot. So unless you have parking in the front of your house or there's a big enough or wide enough drive so that you can still park, you have to keep that in mind, because if you're going to have a detached property and you're going to add this laneway onto it, you don't want to lose your own parking. Something to think about as well, because this isn't a 2-story. These are just single 1-story properties here. So what I was really running at here, and when you're looking at it's about 600 square feet, we don't have any comparables in Mississauga really to tell you what they would rent for. So what I've done here, they just kind of pulled up the numbers. So they're saying on average the cost to build is about $320,000. So when I'm going through here, if you download the material list and download it, they're actually going to break down everything from the 1-bedroom, the pricing and references, and the studio. So we're going to look at the 1-bedroom material list here and pricing reference. So if we're jumping on here, this is the stamp as of June 30th, 2025. So basically, when you're doing your pre-approved site, you're kind of following exactly what's going on in terms of this land. Now, some of the prices are different. Some of them are a little bit more expensive, but for the average, they're pretty spot on. So if we go to the bottom here, we'll jump right in here to show you. So basically what they're saying total cost is about $320,000 to build a 1-bedroom laneway home, 1-bedroom suite up to 600 square feet. So what do you think? Love to know your opinions on this one here. It's a lot of work. It takes about a year to do. Permitting in Mississauga is a little longer, probably looking 6 to 8 months. Let's just call it from being built to rented out. You're probably looking at about a 2-year process. So knowing all of that and knowing what you're doing with the variances here, we're going to run the numbers. So I'm just going to pop up a basic sheet here. So I'm using $320,000 to build, give or take. Again, could be a little bit less, could be a little bit more, but we'll just take that as your number. Your rental rates expected. Now, this is always the one that's going to be the question mark. I mean, what you're finding in Toronto, if you have a 2-bedroom, 2-bath, let's call it laneway house, on average in the west end of Toronto, they're renting for about $3,000 a month if they have parking. If they don't have parking, $2,800 to $3,000. So I'm just going to inflate the numbers for argument's sake and say you can rent it out for $2,500. So we're going to say $2,500 is the rent. Tenant will pay utilities, because again, it's all going to be separately meters. And then time to build, I'm saying 1 year. We'll go 2 years, but again, you're not building this on a vacant property. You're most likely going to be living in your property already, and you're going to do this. So if we're running through there, your cash flow per year is going to be about 30 grand. So you have to ask yourself, is this worth it? So it's going to cost me close to $320,000, and it's going to get me about 30 grand a year. Now, that might be a great recovery. Your ROI on that one is going to be about 10%. Your recovery cost on that is going to take about 11 years to recover the 320 from the investment initially. So again, if you're going to put this investment in, you're looking at about 11 years to recover the cost of it from the tenant, and that's saying that nothing goes wrong. You don't have to spend any more money. There's no expenses that come from it. So do I think it's a great idea? I think it's okay. It's a step in the right direction. Do I think laneways in general are the right move? I think if you're able to put something into a house that you've been living in for 15, 20, 30 years, I think it's a great option for you. It's a way to build up some extra money. Maybe you use a line of credit to do it where the interest versus the rent can pay itself and you're chipping away at it. But you got to ask yourself, when you're going to spend $320,000, if you have that kind of money, is there somewhere else I could deploy that capital? Right? With 320 right now, that's 20% down on a $1.2, $1.3 million property, roughly speaking, if not more. So, I mean, right now, if you were to buy a semi in Mississauga, you could probably pick one up for about 1.1, rent out the top and bottom, and that alone is going to bring you probably a better return than just this. Plus, it's another asset. It's a secondary asset. The house value of your property per se doesn't necessarily go up. You have to remember, depending on the size of your home, depending on how much yardage you have, your backyard, these are all factors you have to think about, because when you go to resell that property, if you are living in a 4-bedroom, 4-bathroom detached family home, does that family want the backyard? Did you lose your parking? These are all things you have to ask yourself before deciding to put one of these in. In theory, they sound great, but what we're finding, especially in Toronto, is when you go to resell them to an investor, the amount of capital that you're going to need to deploy in order to buy the property, like most 5-plex, 6-plexes that are doing the 4-plex with the laneway in the back, they're ranging between 2.5 to 3 million. So in today's market, in a market in general, you have to ask yourself, if I'm going to sink 800, 900,000 into buying a property, would I buy a 5-6 unit property, or am I going to look for something that might be 10 to 15 units and it's going to return me such a higher amount? So that's kind of our analysis on it. Love to hear your comments and the feedback, what you think about laneways, and just kind of if that's the way that the direction that things are going to go throughout the city to increase housing. Curious on your opinions on it. If you enjoyed this, share it with a friend and hit us a like or subscribe.